Guys, it's official. Australia is in lockdown. Thanks, ScoMo, who's put a stop to all activities in public areas such as eats, gyms, pubs, clubs, and Bondi Beach. So as a result, all states are shutting down their borders. Nearly all flights have been grounded, which has caused much distress to the travel sector, but for many investors, this has left them scratching their heads wondering, is this now a buying opportunity when stocks are 50% or more under the current values in which they were at the beginning of the year? So in this video, I wanted to cover Australia's two top airlines and see whether they're worth purchasing during this downtime. Now, obviously, please do your own research before you take on any of my thoughts and ideas. I'm just here to provide the information, go through some of the balance sheets and things to consider and whatnot, but it's ultimately up to you whether you make those purchases. Now, before I continue with this video, it'd be greatly appreciated if you could leave a like on the video because it does help out the channel heaps. And guys, today's video is actually taking me hours to look into. I mean, I actually don't know how airlines make money, apart from flying people, duh. So I think you'll be quite surprised by a lot of the numbers that you will see today in this video, and I hope you get a lot of value out of it. So anyways, apart from that, let's move on to the first one. So Qantas, everybody knows it globally for being Australia's airline, the big jumping kangaroo with the white and the dash of red. Everybody knows that airline. So I had a look into their balance sheets and just had a bit of a research around just to see exactly how they make money. So here's a breakdown. If you look at the operations table, we can see that 15 billion is made from passenger flights. We have 971 million from freight and other sources of revenue that makes up $1.2 billion. Now, if we have a look at the breakdown of this revenue, you can actually see that international makes up the lowest portion of their income. Now, I don't know about you guys, but this shocked me because international tickets are the most expensive tickets. A lot of people fly internationally, so in my head, I thought that that would generate a lot more than what's shown here on the balance sheets. But once I actually had a look into this annual report, it actually kind of makes sense and gave me a lot more insight in the airline space. Now, if we have a look here, Qantas Domestic is purely the highest, I believe, due to Aussies having a strong bias towards the Qantas Airlines. Again, with the jumping, flying kangaroo and being Australia's very own. Plus, we also have a massive loyalty program that everybody is familiar with in Australia in the Qantas Frequent Flyer program, which leads us on to the next stream, which is the loyalty stream. Now, obviously, everybody knows about Qantas Frequent Flyer, but I didn't actually know that Qantas sells this stuff off to other partners, which is how they make their money, because I was thinking, how is this the second biggest stream of income? It just didn't make sense. Anywho, Qantas actually sells their miles onto the partners such as Woolies, ANZ, and any other partners that you would have seen who offer, frequent flyer miles if you purchase from their product or service selection. And the reason why this works is because most people are, again, on the Qantas Frequent Flyer program, and therefore, if they see a product or a service that gives them and bolsters their points, they're more likely to use it. So it's a win-win scenario, win-win for the consumer and also the company that or the partner that's offering the product or service. So anywho, obviously Qantas sells the miles off and makes a profit out of it in comparison to, the redemption rate and what people can get for those points. And they're making a killing off it in comparison to how many memberships you figured there would be in the whole of Australia, of which very few out of how many memberships there are in Australia would actually make a claim, of which, by the way, you should be redeeming like business class flights and above. Anything, premium economy and underneath is really not worth it. And especially if you're shopping with those points, it's really not worth it at all. Now, if we look at the next form of revenue, we're looking at Jetstar, right? The budget airline, which includes both international and domestic flights, which many people have flown before, including myself. Now, they are becoming more popular with their cheap international flights, in particular, their flights to Japan and Vietnam. Now, I'm pretty sure Jetstar is like the sole reason why there's been such a big boost in Australian tourism over in Japan, because some of the flights are so cheap, and I've seen so many of my friends just fly to Japan so many times, and then now it's actually outgrown Bali in terms of how many Australians are visiting like a certain location around the world. It's just mind-blowing. And it's great. It's great exposure for Japan and a great source of, tourism for them as well. And of course, you have their last passenger form of revenue, which is their international offering. It's a great service, but numbers-wise, not that good. Now, that's not the important thing. What we need to be looking at is the net revenue and profit, because revenue shows you growth, but the operational cost for such growth is a big underlying issue for many of these airlines. And for Qantas, it's not looking good. Now, you can see here that their total expense for operation is $16.4 billion, the biggest cost of which is staffing and operation of the aircraft, which includes airport fees, and their revenue is just above $17.9 billion. Now, this is concerning because we haven't even delved into their debt, which I will let you know is also not looking good. Now, I'll be fair in saying that they have reduced their debts over time by 36%, but their current debt to EBITDA is at 230%. And given flights have been grounded, this percentage is going to be much higher due to the amount of refunds issued either in cash or credit. This all has shareholders quite worried, and I don't see the confidence of people wanting to fly spark back to life immediately after a vaccine comes through. So confidence for shareholders is at an all-time low, which is reflected within their share price. So do I see Qantas failing? Absolutely not. And later on in the video, I'll touch on about the government bailout that's been announced. Now, before I move on to Virgin Airlines, again guys, give me a like on this video if you're enjoying the content so far and if you've learned something along the way. Anyways, on to Virgin Airlines. So Virgin Airlines, arguably my favorite out of the two, just because it's cheaper and it has an alliance with Singapore Airlines, which is my favorite airline internationally. But Virgin in Australia is just looked at like the little brother to Qantas. But unlike Qantas, the brand is actually more internationally known in the UK and the States, as they have other projects outside of, well, just planes. But now we're just talking about the Australian service. So their passenger revenue comes in at 5.3 billion, freight comes in at 125 million, and their loyalty programs come in at 383 million. So much lower than Qantas, which lines up with their lower operating costs, which shows that Virgin is too operating at a loss. For a quick breakdown, this is how the revenue streams are broken down, with domestic making much of the money here and Tiger Airlines just sneaking in. But yeah, so these are the numbers, and yikes, I guess this is just what airlines go through, guys. Like, I'm not sure if you guys know out there, but they do operate at a loss and they go into much debt to operate a lot of these flights. And in contrast to Qantas, Virgin doesn't have as much liabilities and debts, which is a good thing when we're talking about the drama later on with people, Qantas. Rumors has it that the CEO was questioning the cash balances and whether they'd be able to survive this whole corona pandemic. So let's move on to the government's introduction of the bailout. So the bailout is $715 million for Virgin and Qantas, which I'm kind of for, because no nation should and would actually let their airlines go. It's fine to let companies like Webjet and whatnot go by because, they're not really part of the aviation industry and form innovations in that space. But the aviation industry in any nation should stay alive and well. Otherwise, you're left in the hands of international competitors who are just going to come in, and well, that's just a kerfuffle within itself. So you don't want that happening. Anywho, this plan has brought on a lot of anger and criticism, with the biggest one being on the executives who've issued large share buybacks to increase shareholder returns. If you don't know how this works, essentially, if you reduce the pool of shares out there, the return for each shareholder is greater, which looks great for the CEO, and they get a great pay packet increase, which has been reported to be $23 million in the case of Alan Joyce. And I mean, do you blame him? If that incentive was waved in front of me, hell yeah, I'd be issuing share buybacks. It's a good thing for me, obviously, with the pay packets. It's a good thing for the shareholders because their share values increase. There's less dilution out there because they've brought them back into Qantas. The only bad thing is when something like this comes about, and now the company has less money to kind of adapt to the situation, because generally when there's a downturn, what gives a company the permission to provide innovation, to be sustainable within these periods, is cash in the bank. And we can see this in big tech companies like Google, Apple, and Facebook, who have an extremely low debt to cash ratio and are afforded the permission to make acquisitions and to do whatever they need to do to ride through these tough times. Anywho, so what do I think about the whole situation? So for one, I will not be investing in airline companies just because, well, what have we learned today? Not very cash flow positive at all. And if any of these airlines need to raise any form of revenue, there will be a share purchase plan that'll probably be issued. Otherwise, it'll be in the form of accruing more debt. Now, with the government bailout, I don't know if they're issuing more shares. And with Virgin, when they're asking for cash injections, there'll probably be an issue of more shares towards whoever's giving them that cash. So there's always going to be a payoff when you're receiving some form of cash, and this is where current shareholders really lose. So if you're putting your money into the current shares at the moment, yes, the share price might go up, but in the long run, I'm not sure about the viability of these airlines. And if they're not producing a cash flow, how are they issuing dividends is my next question. Are they taking out more debt to issue the dividends? Are they issuing out more shares to raise capital to then issue out as dividends? Very important questions to be asking yourself if you're looking to invest into these airlines. But anyways, guys, that's it from me. I hope you guys got a lot of value out of this video. Remember, click the like, subscribe for some more videos and content. Let me know in the comment below what airlines you enjoy flying, and I'll catch you guys next time. Cheers.